Hey, what's up, everyone? Happy Friday. It's July 7th, and welcome back to the Daily. Hope you had a wonderful trading day and a wonderful week. Hopefully, you had some time off. But wow, it was exciting yesterday, but what a day today was. Let's walk through it. Let's not waste time. I know you guys are probably either listening to this commuting or just kind of walking out and about. But let's see what happened today, kind of going through the forest and the trees. So when you look at breadth of the markets, it's not going to tell the whole picture. But again, I highly recommend getting into this habit. There are many data sources to look at this, but you can look at new highs and new lows for the day, as well as advancing and declining shares. So today, July 7th, we had 104 new highs and 85 new lows. Pretty much equilibrium, not a big deal. Advancing 5,600 shares and declining was about 2,500. I'm just rounding off. The 10-year remains elevated here. It doesn't seem to be going down much when I take a look at this real quick. We are kind of hovering in this bullish pennant, and it looks like it's going to break up, if you can imagine that, with rates already being as high as they are. And we'll cover that in a second. So, what really stuck out to me today, I'm actually kind of excited. Neither bullish or bearish. I'm thinking to myself today, oh, wow, it's complete. Bulls have taken over. Yesterday we had kind of a sell off, and then at 11 o'clock, uh, a bullish impulse came back and it fought its way back, right? But today, it was the complete opposite. Um, Opening bell, we just ramped, right? It was like, the usual summer pattern of, the first 30 minutes marks the bottom of the day and we just charge higher. And that's what it looked like. And even at lunchtime, I was like, "Wow, this is really strong. It looks like we're going to potentially uh, climb back even from Thursday. I mean, from Wednesday's action." But then, right around in the afternoon, around 1:45, uh, the sell-off just kind of started to happen, and I'll cover that in a second. But let's kind of go back in time here to the morning. Today we had pre-market the jobs report, and I think it was a mixed bag. If you take the time to read through some of this data, you know you can always paint a bullish or bearish picture with this data, depending on which side of the aisle you're on. But some of the things that stuck out to me was the part-time jobs. It rose almost 500,000, like 400 something thousand was the number. But let's just round up and say that's half a million part-time jobs that were added, right? Like those are not high growth, high wage type numbers or jobs that contribute to spending. That was something that stuck out. They also net revised down from the prior months. These numbers, I don't know how reliable they are from the government. So basically, they're saying that they had to correct previous months down 100,000 or 110,000. I'm sorry, I just like to round these numbers. Like, what's the difference? 100,000 or 110,000 people. Um, Government jobs accounted for like 60,000 plus of the headline payrolls, right? So, like, government is just getting larger and larger. I guess eventually all of us can work for the government. Um, so, those are the kind of things that stuck out to me in the report before the opening bell. Uh, you know, and as I mentioned, as soon as the market opened, it was kind of like wishy washy, didn't know what to do with the data. But then before 10 for sure, like 9:40 ish, we just started to rock it. It was right around 1:45. I saw the selling starting to begin. At that time, I was really watching the 10-year as well as Apple, Microsoft, Google, Meta, the seven horsemen, I'll say. And I noticed as the afternoon kept going, the Dow, the S&P, and the Nasdaq were giving up all of the gains from the morning. Whereas yesterday, we sold off hard, and the best the overall indices could do is get maybe 50% of the sell off back outside of Apple and Microsoft that closed green yesterday. But today, the entire indices, other than the Russell, was giving up the entire day's gains. And we closed down pretty strong into the last 10 minutes. Just pulling up my phone here. I'm doing this real time here. You know, as you know, the Dow closed. Uh, it was just ugly. The last like 5 minutes of the day, the Dow closed almost 190 points down, and the S&P or the ES, which I track more, was down close to a 1/4%, and the NQ also closed very close or pretty much near the lows of the day, and then it was like barely hanging on from yesterday's lows. The Russell 2000 was able to finish green, but man, that was a wicked, wicked U-turn. Tesla and Google and Microsoft all lost their entire day, the morning's gains. Um, you know, the only thing I could say is I don't want to jinx it, but man, if this means two-sided trading is genuinely going to come back the second half of this year, that actually would make me very, very happy versus this, close your eyes, hold your nose, and just pray that every day is going to be a green print. And people will actually have to use guile and skill for trading. So, what was strong today, despite that huge turnaround? If you look at oil, take a look at OIH. Oil was rocking today. And, higher oil prices is not going to make those in the White House and at the Federal Reserve happy, because that adds to inflation numbers. So keep an eye on oil. Gold miners in the earlier part of the day, GDXJ, the gold miners index, was up almost 2%. It closed up about 1.5. I'm always a little weary about gold and silver because of how manipulated the sector is. But if you take a look at gold, just the metal, or GDX, the large cap miners, it's hugging the 200-day moving average, and it's being pressured by the falling 50-day. So just be very careful here. If you're in gold right now, depending on when you got it, it looks okay. If you got it a long time ago, but right now, you'd want to kind of take a look at uh, the crosswinds of metal and mining, like currencies, the dollar, treasury yields, because it all kind of gets lumped into that group. Some craziness that I'm seeing on the strong side. This really stuck out to me like a sore thumb. I don't know what's going on, but Wayfair, symbol W, they're kind of like uh, Amazon, but they focus on home furnishings, a darling during the COVID pandemic lockdowns. Today it was up 7%. And you're not going to believe this, but year to date, it's up 82%. You would think, wow, like this is hot. I got to get in and chase this. But be very careful, because you have to look at where a stock has been. It was as low as 61. I mean, it's at 61 now, but it was as low as 30-ish earlier this year. But it was also 350 2 years ago, when everyone was on lockdown, and we were all just twiddling our thumbs trying to upgrade our homes. So be very careful with Wayfair. I just noticed that it was up 7% despite that sell off at the end of the day. What was weak? VIX, as usual. Friday is Punish VIX Day. It was getting crushed all day at the end. Obviously, with the equity selling off, it bounced a little bit and dead cat bounced. Who knows where this is going to go next week? But hey, if VIX keeps coming down to like single digits, I'm praying. The cheaper the VIX or volatility goes, it's not going to zero, but it's kind of like that big balloon that you just keep pushing under the pool and trying to get that big balloon or ball next to your feet or your knees. It's going to pop eventually. They're probably going to knock it right back down. But I mean, like, look, if the VIX ever gets to single digits, I am going to take a sizable position on volatility issues. What to watch out for next week? Everyone should be back in the office or at their home offices, so I expect more of a news flow slash volume next week. Um, I despise consumerism, especially like holidays, which I'm actually kind of glad Amazon Prime Day is not, during July 4th or Labor Day. But still, you have Amazon Prime Day next week, April 11th to the 12th. I'm sure there'll be some good deals. I hope you get what you've been waiting to get at a good price. Lots of Fed heads are speaking next week, talking about where they think the economy is going, soft landing, no landing, hard landing. So be on the lookout for headline shocks. And on Wednesday, you have the CPI report pre-market, as well as the core PPI, producer price index report, Thursday morning pre-market. And the last thing, it's not next week, but it's definitely should be a big circle on your calendar, is July 26th. That is when everyone is expecting the Federal Reserve to hike rates once again. The consensus is that they will raise, but no one really knows, and no one really knows what their reaction will be. But at this point, the 30-year mortgage is sky high. Affordability is at the bottom of the barrel. No one can afford a home. No one can sell their home to move because they'll have to trade in their 3.5% 30-year fixed mortgage for a 7% mortgage at crazy prices. So the real estate market is kind of at a standstill in sales. And then you take a look at all the rental chaos that's happening right now with vacancies and Airbnb. It's just kind of like at a stalemate right now. But that's kind of the update on what my observations were today. I pray to the finance gods that two-way trading or real buyers and sellers will come back, where we can start to build the true balance area. But I hope you had a great week. Have a great, wonderful weekend, and I will see you all next week. Again, thank you again for subscribing to NYU Grad Substack. Please share this podcast with anyone you think that might find this entertaining or even educational. I try to do this under 15 minutes every day and no commercials, and just kind of giving you what my eyes are seeing from being trained and trading for over 25 years. So bless and have a great weekend. Thank you.